If you are a brand new investor, you want to start off on the right foot. You want to invest in core growth stocks that are going to provide you long-term growth and long-term safety. So I have put together a list of 10 different starter stocks to help you get started investing into your portfolio. Hello everyone, I am Colin and this is Harness Money, and my mission is to help you and myself build wealth over time. And don't forget, go ahead and smash that like button to help me grow this channel and just reach as many people as possible. And now, let's dig into the 10 different stocks that I have put together to help you build your portfolio. The very first stock that I have on my list is going to be Costco, ticker symbol COST. Costco is a warehouse giant. They provide a membership program for their customers where they can shop in bulk and buy in bulk, and they are a strong brand and a strong company that is nationwide in the United States and some other countries around the world, and they are just continuing to grow and grow and grow. The thing I like about Costco is that they have a loyal fan base, that their loyal customers keep going back more and more and more, and they've figured out their secret sauce to continue to grow their business. Now, the next one is another brand, and that is going to be Starbucks. Starbucks is unparalleled with their branding. Everybody knows the green aqua symbol that they have, the mermaid or whatever they want to call that, but everybody knows what Starbucks is, the brand, and what they stand for. But the thing I love about Starbucks is the repeatable routine, is that when you go into a Starbucks, you get a great product every single time that's handcrafted, and they have stores around the world that are great. I love brands that are high-end, that provide a high-end consumer experience. So that is going to be the Tiffany's. Everybody knows the blue box from Tiffany's. That's Starbucks with their high-end coffee. That is the Tesla brand with their cars, or the Lexus brand with Toyota. So high-end brands are really differentiated. They can charge more for their products, and they generally have consumers that love their products and go back time and time again. So Starbucks, I just don't see any other coffee business displacing Starbucks in the near future. So that is why I love this business. They also pay a dividend. Their ticker symbol is SBUX. Now, let's go to the next one. The next two are going to be in the technology space, and that is, of course, Apple. I cannot leave off Apple from this list. Everybody knows Apple. Everybody knows what they stand for. But the thing that I'm looking at Apple with for the next 10 years, we all know the story of the last decade, which was the iPhone. Now, the next 10 years, I think, are going to be totally different in the fact that they are going heavy into the services space. They want that recurring revenue. What makes technologies so particularly profitable is they have month-to-month recurring revenue membership subscribers. So Apple has fitness, they have their podcasts with their audio and their music. Now they have the Apple TV. So they're just going to go harder and harder into this monthly subscription fee, and that is just going to generate more and more revenue from their businesses. And then you have, of course, you still have the core businesses, which are the iPhone. The iPad business has been going bonkers since 2020. And then you have the computer. Everybody forgets about the computer laptops, the computer desktops, the iMacs, but those are still strong core businesses for them, and they're going to be stronger going into the future. So I still like Apple, even though it's has a high valuation. I still think it is a great business and is going to be a growth story into the future. The next one is, of course, their biggest competitor, Microsoft. Can't leave Microsoft off the list. They pay a dividend, ticker symbol MSFT, and the power of Microsoft. They are pretty much competing in all aspects with Apple, but I think it's a different story. I think that Microsoft, even though everybody knows them for Windows, for their computers, for the Xbox, I really think that Apple is a business story. That the power of Microsoft is in their Outlook, in their email service, and also with their database, all the products that they provide to businesses in order for businesses to function. I think if you sucked out Microsoft from the world, took it out in a vacuum, that businesses would really be hurting. That a lot of businesses are relying on Microsoft every single day to promote their products, to get their products out there, and to just function on a day-to-day basis. So I believe that Microsoft is really that business story. They have their claws in so many different areas of business and consumers that they are going to be powerful for the next 10 years. And of course, the cloud. The cloud is the biggest thing that they have going for it. They've already announced that they've got several different US government contracts, and I think so they're going to be deeper into the government, and I think that that's going to send a signal to all these other world governments that you can trust Microsoft, that Microsoft is a Class A performer, a Class A company, and that it is going to be reliable into the future. So I like Microsoft. The next one we all know about is Johnson & Johnson. J&J has been in the news for their vaccine. They have a vaccine that's going out, that's being delivered. But I think the story about J&J is the diversification. They're not just a vaccine business, whereas a lot of other biotech or pharmaceutical companies just focus and laser focus on that, on creating drugs for consumers. But J&J has so many different products from what I wrote it down here. They have mouthwash, they have baby shampoo, they have medical devices, they produce vaccines. So there's all these different legs, all these different arms of lines of revenue that they can use to pay that dividend to continue to grow into the future. And the other thing is that when you have a lot of different products like medical devices and consumer products, you have a lot of relationships that you can leverage. So J&J has relationships with grocery stores, with the pharmacies, with doctors. I mean, you just cannot put a price on the relationships that they have created over time. That database of relationships will really promote their growth into the future. And now, I also think with the vaccine that has come out, that has just jump-started the production of other drugs, the research and development of other cures and other vaccines for different kinds of ailments that are out there. So I think J&J is going to have a bright future going forward. The next stock on our list is ticker symbol LMT, Lockheed Martin. Lockheed Martin is a jet maker for the United States government. It just came out that President Biden has increased the defense budget by something like 2 to 3%. Now, that may not seem like a lot, but the defense budget is huge, and I don't think, with Biden being a Democrat and still increasing the defense budget, a Republican is not going to decrease the defense budget. Republicans want to increase it even more than Democrats. So I don't see the defense spending going down anytime soon. And also Lockheed is really, they have so much intellectual property that is so vitally important for U.S. national security. I don't think that the United States government is going to let anything happen to Lockheed Martin into the future. That is a safe bet. The next on my list of 10 starter stocks is going to be ticker symbol WM, Waste Management. It's not sexy, it's not pretty, but trash is a factor. And it's going to be more and more important in the future because of the green economy that we're going to. The decarbonization of the planet, the green transformation that is happening in the energy sector, it all is critical. It all is dependent on the way that we dispose of our wastes. Waste management is one of the largest providers of landfills in the nation, so that means they also have access to all the different recycling elements that go along with trash. It's all about the consumer's trash. And if anything, consumers are not getting less wasteful, they're getting more wasteful. As more and more people become middle class and upper middle class, then that will create more and more consumable goods, which means waste management will become even more important in disposing properly of all of these used. The next one on my list everybody knows of is JP Morgan Chase, the giant bank. It's one of the big three banks, and JP Morgan, Wells Fargo, and Bank of America. And I picked JP Morgan because I think it's very well run with Jamie Dimon and that core group of executives there, but nothing can stop JP Morgan. We've seen that they had a scandal with commodities where they were potentially manipulating the commodities market, but they just got fined $900 billion and nothing happened. They just kept on rolling. They just kept on producing their great banking clients. It's so integral to the United States economy now that they are not going anywhere. And there are regulations that they have to have so much cash on hand now because of the 2008 crisis that there's really nothing that is going to prevent this bank from growing into the future. Now, they may not be a fast growth, they're very large and very integrated into the world economy, so it may not be a massive, doubling of their net income or doubling of their stock price, but it's definitely got some growth going forward into the future. The next one is a turnaround story. It's going to be WBA, Walgreens Boots Alliance. Walgreens stepped out of the United States market and ventured into the European market with the Boots acquisition, and they are a pharmacy and just corner store consumer company. But the reason I like them is because I think that they're really undervalued. They've been hurt by the CVS merger, by Walmart taking more pharmacy share, but there's something that Walgreens has that other people do not have, that a store like Walmart has, and that is reach into neighborhoods. They are usually on the corner. They are the corner store, so they're in a lot of communities, and they have that last mile access. That is so very important when it comes to delivering products to customers. So they can leverage their network of thousands of stores around the country to reach those communities that are maybe more remote or just need a store right down the street. People are going to Walgreens because it's close, because it's convenient, and that is going to set them up for success into the future. Whereas a business like Walmart may not have as many corner stores. You might have to travel a little bit of a ways to get to a Walmart. So I think that is definitely in their advantage that they have that access. And then they're going to go deeper into providing care with different services like the in-store clinics, having clinics and doing more services in their pharmacies. They've got so many stores, they can create mini clinics and be successful that way. And finally, the last one on the list of starter stocks is UPS, United Parcel Service. They are the delivery service. So we've seen Amazon take over the world, but you still need partners. They're still gonna need those partners in UPS and FedEx to actually deliver that last mile, to go to those customers in the neighborhoods. Amazon has warehouses, but they don't have as many warehouses or locations as the UPS or the FedEx. Their network is unparalleled. They've been doing this for decades. They have the ability to deliver quickly to the individual households versus we saw what happened with the United States Postal Service. They became overloaded, everything slowed down. But since these are private companies, UPS and FedEx, they have more of an urgency to make sure that their product is delivered successfully to the end consumer. So those are my 10 starter stocks. Now, what I would do is I would pick one or two of these stocks on this list here, and I would work towards putting $1,000 towards each stock. Get to $1,000 in each of these stocks. That gives you safety by having two different ones, and that gives you a strong position to build from. Once you've got those two stocks fully funded, then branch out into your more risky growth stocks. Those are your younger stocks, your lower market cap stocks that are hungry. That's like your Teslas or your Airbnbs that have maybe are younger companies that are still in that growth mode. But start with your starter stocks, and I hope you enjoyed this video. Thank you for watching. Don't forget to hit that thumbs up button, and remember, make good money choices. Till next time.